Hey guys, it's James with the Chart Guys. It is Monday, September 12th. I just want to go review the commodities, and let's start with oil. I keep mentioning this in my videos that after oil set this high here, we've set a higher low, lower high, higher low, lower high, higher low. Currently on the daily, we are forming a bullish reversal after this big red day on Friday, with increasing volume off the 50 MA, this yellow line, and the 10 MA, this red line. What bulls want to do is get to this pointer. What bulls want to do is get over this green MA. That's the 5 MA on the daily, and then see a test of this middle Bollinger Band here. We also have this downtrend line if it does get above the middle Bollinger Band. And you can enter a short position on oil short term if you see a rejection from any of these resistances, this 5 MA on the daily, middle Bollinger Band, and same as 20 MA and this downtrend line. And the reason I say short term is because you can see the pattern is tightening and tightening, tightening, and we're going to get a break sometime soon, and we'll get a longer term trend in which way we will play oil. And that's a really nice way to play commodities, is to know the longer term trend, because you can start a core position and then trade around that core position. That's how I played miners all year when I got into Nugget at $35, and I added JNUG at 160, and I traded around that using options, especially going into like volatile weeks where FOMC is talking and there's uncertainty of rate hikes and things like that. So anyways, looks like the daily will give us a longer mid and longer term direction soon. Bulls want to break above this 5 and middle Bollinger Band for a bullish continuation and possibly break through this uptrend line. What bears want to see is a rejection at any of these resistances on this chart and a break below the 50 MA here. Looking at the weekly. Looks the same. Yeah, nothing sticks out to me really on the weekly. We are in a tightening pattern. Yeah, I guess we are in a tightening pattern on the weekly too, because of the daily. Let's go to gold. Gold on the weekly time frame. So the reason why I'm still long-term bullish gold is because look at this trend since December. This big move up, sideways consolidation, another big move up, sideways consolidation, and on the weekly, there's nothing bearish about the gold chart. You can see that the volume is declining here as it consolidates and tightens in this pattern. And currently on the weekly, it's bounced off the middle Bollinger Band here and has defended it. And after forming this bullish reversal candlestick, we didn't get much follow through last week, and that's a big reason was because of Friday and the hawkish statements by the Federal Reserve. We are currently forming another long lower wick candle, and we'll see how the week finishes out and if bulls show up and really start taking gold a little bit higher to break this out of this consolidation for the next move up, and trying to break 52-week highs. On the daily on gold, you can see that after 3 big red days, we saw a higher low being set after this low here, and that's right off the 10 MA. And the good thing about that is the bull showed up with increasing volume from Friday, and we'll see if we get continuation on this candlestick here. It's still early. Obviously, we have overnight. And we'll see if we can break above this middle Bollinger Band here and this green MA, which is the, let me zoom in for you guys, which is the 5 MA. And the 5 MA is moving down, so they could meet right here and create some resistance. But breaking through that would be a good bullish move for gold bulls, and we will test this 50 MA soon, which is currently at 1343.50 on the daily. Let's take a look at miners. Let's use JNUG chart because I know most people play gold using the 3x ETFs. What we have on miners on JNUG particularly is a uh, bullish piercing candle, and what that means is that after this big red day here, the low of this candle is 1795, and today we opened lower than that, and we opened at 1718. So what a bullish piercing candle is it opens lower than the previous big red candle, but what it does is bulls show up, buy up the dip, and they close above the midline of the previous day's red candle, which we did. And what's incredible about this is um, you see on Friday, JNUG had an incredible amount of volume, and I was really impressed that we actually beat that volume today, and that was on almost all bullish volume. So um, just based on this candle here and knowing how um, the the psychology behind this candle, that uh, big dump, but bulls came in and bought up all the dip. I'm leaning towards continuation bullish in miners for the rest of this week. And again, there's no economic data coming out that I foresee that will cause any turmoil to this gold move. I mean, there's obviously all those unforeseen things that could come out in the news, but I think Thursday is the next economic data that we have coming out, and that's jobless claims. But with the Federal Reserve going into their silent period, I am leaning very bullish towards miners. And if markets rally and gold continues a new uptrend, then you're going to see a pretty incredible move, I think, in miners this week. So something to keep your eye out on. Finally, let's do natural gas. So natural gas, let's start with the weekly. All right, let's see. Yeah, natural gas has this long-term downtrend line. Let's start here. That's from February 2014, and you can see it's caused a lot of resistance so many times to knock down the price on the weekly. And today, today to start the week, it actually got above this downtrend line. We'll see where, obviously we still have the rest of the week. We'll see how it closes in relation to this this downtrend line. We'll see if it actually closes above it this time. This is a really good sign for the bulls if you can hold this above this downtrend line, because with winter coming, obviously there's going to be more use of natural gas for heating, and so it could be a new trend change in a longer term trend change in natural gas, and we could see some incredible gains in UGas and UNG. And I have long term UNG calls that I am playing out till January. On the daily, you can see that this upper Bollinger Band has been incredibly strong resistance. It's knocked down the price so many times, and the recent trend on the daily has been after this pullback, after being knocked down from the upper BB again, we had this pullback, a big green candle here, consolidation day, big green candle here, and you can see where the volume on these green candles outweigh the volume of the red candles, so that's a good sign for the bulls. So we'll see if we get another consolidation day tomorrow and then another move up and try to go to break this upper BB. The upper BB looks like it's opening up, so there is some more room to the upside here, in my opinion. But storage numbers are out Thursday. We'll see how it goes. And that is it. I will see you guys tomorrow. Best of luck. Today was a really fun and volatile day. So I will see you guys tomorrow.